Good evening, everyone. This is Henry Gambell with SimplerOptions.com, and in today's free video I wanted to follow up on some of the discussion that we had spoke about last Monday when we were looking at the free video. So as we were going through that analysis, and I believe it was right on this day that we were looking to the spiders for some potential resistance, and we had gone back kind of speaking to some of these previous swings. Now I've got several different things marked off here, but you can see the general concept where we were looking at given rallies in time, and the idea that this rally in time could put a pause to the rally kind of right there in the middle of the week. I love having these concepts or things that back the idea of, more basic analysis that I've always kind of looked at. We've always followed or been taught the idea that the reversion to the 21 EMA is a good place to look for the basic reversion to the mean, and then if that trend is going to continue, it should fail from there. So knowing that the reversion to the mean has come through, knowing that I had that bit of a timing there for a potential high, all of those were the reasons that we were looking for this to play out. Now, we kind of got a little dip later on into the end of the week, but then Friday was the day that I think this really started to play out. You can see the SPY closed down here below the fire line, and this was the reversal I really wanted to see, and we had some great follow through to today with that on today's drop. So what do you look at in this move, and what is one of the big things you try to decide with this? Well, the argument could be made that the momentum of the squeeze is still trying to move higher. Obviously, the general trend of the spiders is extremely bearish, but the main thing that I wanted to point out here, last Monday we speak about symmetry in time. Today, let's talk about the importance of your 618 retracement. Because if you're going to point to this as being any type of a more important low, this level that we made there at 181.02, from that low, what you would want to see is that the pullback to it holds. And then you say, well, we haven't broken the low, so isn't the pullback holding? This is where that 618 retracement is so important to me. So we were able to stay above it on Friday's action, but then gapped below it today. That is a break of that move, and in my mind this tells me that we're going to take out the 181.02 low and then push on down into 177 and ultimately 172.64. Now a lot can happen inside of this, so don't wake up on Tuesday morning and just start blindly shorting this. Remember, my short take on this chart will remain intact as long as we do not clear 194.58. 194.58 is a full 10 points from where we're trading here. So give yourself a little bit of leniency, try to work the bounce on the way back up. But ultimately, I think you see this pattern fire to the short side, off your time and price, and go on and to make a major extension. So that is the basics of how those patterns play out. If you can root your foundation in something like that, then it can give you an edge as you start to approach other parts of the S&P, and I hope you guys find that helpful. One other thing I wanted to make you aware of is a free webinar tonight that will be primarily the free one's going to be with John, but then for the actual class itself I will be working this as well, but this is getting started with options. So if you're new to this and you really feel like this is a little bit overwhelming, this might be something that you want to look at. So today, Tuesday at 7 p.m. Central Time, John is going to be going over some of these basics. This is 100% free. You can get a feel for if you like the style, if you like the concepts of what we're doing, and I think you'll find it helpful. So if that's something that interests you, just enter your email here in the link that will show up after the video, and I hope to see you there.